You woke up, checked your phone, or opened your Experian app and saw a notification that instantly made your stomach drop, a missed payment or a sudden decline in your credit score. Or maybe you just remembered that a credit card bill was due 3 days ago, and now you are spiraling with questions. Is my credit ruined? Did my score just drop 100 points? Will I ever be able to buy a house or get approved for a car loan again? That panic is completely normal, but before you assume the worst, you need to understand how credit reporting actually works, specifically with Experian. There is a massive difference between what your bank considers a late payment and what Experian considers a late payment. Understanding that difference, along with knowing how the timeline works, can save you thousands of dollars, protect your credit score, and give you a clear path to fix the situation immediately. Let's break down the exact problem first. When you miss a payment deadline by 1 day, 2 days, or even 2 weeks, your creditor is going to notice. They might charge you a late fee, and if you stay past due long enough, they might even trigger a penalty interest rate on your credit card. However, as far as your Experian credit report is concerned, nothing has happened yet. Credit card issuers and lenders do not report delinquencies to Experian, Equifax, or TransUnion until your payment is a full 30 days past its original due date. That 30-day window is your golden grace period. If your bill was due on the 1st of the month and you pay it on the 15th, you will likely owe a late fee to your credit card company, but your Experian credit score will remain untouched. The credit bureau does not even have a code in their system for an account that is 15 days late. The clock for your credit score only starts ticking when you cross that 30-day threshold. Now, what happens if you pass that 30-day mark without paying? This is where the fear becomes reality, because payment history makes up roughly 35% of your FICO score and 40% of your Vantage score, making it the single most influential factor in your entire credit profile. Once your account hits 30 days past due, your creditor sends an updated data file to Experian, flagging your account as delinquent. If the payment remains unpaid and stretches into 60 days, 90 days, or 120 days late, the damage compounds significantly. A 30-day late payment is viewed by lenders as a potential oversight or temporary slip-up. A 90-day late payment, however, signals to Experian and future lenders that you are in serious financial distress and approaching default. At 90 days late, your score takes another major hit, and lenders viewing your Experian report will see a major red flag that can cause automatic rejections for credit lines, credit line decreases on your existing accounts, or severe interest rate increases. If the delinquency continues to 120 or 180 days, the lender will typically write the debt off as a charge-off and may sell it to a third-party collection agency. At that point, you aren't just dealing with a late payment on your Experian report, you are dealing with a charge-off entry, an active collection account, and severe, long-term credit destruction. This brings up the big question everyone asks: how long will this late payment stay on my Experian credit report? Under the Fair Credit Reporting Act, accurate negative payment history can remain on your credit report for up to 7 years from the date of the original delinquency. That means if you had a 30-day late payment reported in July, that mark will automatically drop off your Experian report 7 years later. However, there is good news that brings much-needed relief. A late payment does not impact your credit score with the same severity for all 7 years. Credit scoring algorithms place heavy weight on recency. The negative impact is most severe during the first 2 years. As the late payment ages, passing the 2-year, 3-year, and 5-year marks, its drag on your Experian score diminishes significantly, provided you do not stack additional late payments on top of it. So, what are your actionable takeaways right now? What can you actually do to stop the bleeding, mitigate the damage, or potentially remove the late payment altogether? First, if you are currently under 30 days late, stop everything and pay the minimum amount due right now. Call your creditor, make the payment over the phone or online, and verify that the account is brought current. Once the payment clears, ask the representative nicely if they would be willing to waive the late fee as a one-time customer service courtesy. If you have a solid track record with that bank, they will almost always say yes, and your Experian score will remain completely safe. Second, if the late payment has already hit 30 days and appears on your Experian report, evaluate whether it is accurate. If the late payment was recorded due to a bank error, a processing mistake, or identity theft, you have the legal right under federal law to dispute it directly with Experian online or in writing. Third, if the late payment is accurate and you simply made a mistake, try sending a goodwill letter to the creditor. A goodwill letter is a polite, formal request asking the creditor to remove the negative reporting entry as an act of grace. In the letter, take full responsibility for the missed payment, explain briefly what happened, such as an unexpected medical issue, job transition, or bank change, and point out your history of on-time payments before and after the incident. Fourth, protect your future by setting up safeguards today. Enable autopay for at least the minimum balance on every single credit card and loan you hold. Set up calendar reminders 5 days before your bills are due and turn on text or email alerts through your bank's app. A single late payment on your Experian report feels daunting, but it is not a permanent financial death sentence. By taking immediate action, understanding how the timeline works, and committing to flawless payment habits moving forward, you can systematically rebuild your credit score and regain control over your financial future.